What if everything you've been told about protecting your wealth is wrong? What if the financial experts steering you toward precious metals are missing something far more valuable? Something that has survived every economic collapse throughout history. While financial systems have risen and fallen for centuries, there's a community that has remained largely untouched by economic catastrophe. No bank runs, no market crashes, no currency devaluations. Today we're going to reveal what I call the Amish hedge, and why it might be the single most important financial decision you ever make. When Lehman Brothers collapsed in 2008, sending shockwaves through the global economy, something curious happened in the small communities of Lancaster County, Pennsylvania. Nothing. Life continued, virtually unchanged. While 401s evaporated overnight and housing markets plummeted, the Amish community barely noticed. What we witnessed during the Great Recession was essentially two economies operating in parallel. One was highly vulnerable to financial contagion, the other almost completely insulated. The difference wasn't luck, it was by design. But before we reveal exactly what the Amish hedge is, let's talk about gold. That ancient symbol of wealth preservation that's been marketed to us as the ultimate protection against economic disaster. For decades, we've been told that gold is the answer, that when fiat currencies fail, when governments print money into oblivion, gold will save us. There's just one problem. History tells a different story. During the Great Depression, Americans couldn't even legally own gold. President Roosevelt's Executive Order 6102 made private gold ownership illegal, forcing citizens to sell to the government at artificially low prices. And during true societal collapse, good luck trading your gold coins for food when hungry people with guns decide they'd rather take it than trade for it. In times of severe crisis, gold can actually make you a target. It's portable wealth, which means it's stealable wealth. And history shows us that governments aren't afraid to confiscate it when they're desperate enough. But there's something even more fundamental that gold bugs miss. Something the Amish have understood for generations. When societies truly collapse, wealth doesn't flow to those holding shiny metals. It flows to those who control the essentials of human survival. And this brings us to what the Amish have been silently doing for centuries. Building wealth that no market crash can touch, no government can easily confiscate, and that becomes more valuable, not less, during times of crisis. To understand the Amish hedge, we need to redefine what wealth actually means. Is wealth a number on a screen, or is it the capacity to thrive regardless of what those numbers do? The English, that's what we call non-Amish. They think wealth is money. But money is just a promise. The Amish focus on what's real: land that produces food, skills that create essential goods, community that supports each other when times get hard. These things can't be inflated away or crash overnight. And this brings us to the first element of the Amish hedge: productive land. Not just any land, not vacation properties or speculative developments, but land that can produce the essentials of human life. Unlike gold, which produces nothing, land can feed you and your family. It can grow in value while simultaneously yielding crops, timber, energy, and water. It's wealth that replenishes itself. Dr. Thompson said, "When we analyze returns on investment, we often overlook the fact that productive land provides multiple streams of value. Beyond appreciation, there's yield, both in terms of food production and potential rental income. And during periods of high inflation or economic instability, these returns typically accelerate, not decline. But the Amish hedge goes far beyond just owning land. The second element is something no financial advisor will tell you to invest in: practical skills and tools that allow you to produce essential goods and services. While the rest of America has increasingly outsourced production to foreign countries and algorithms, the Amish have maintained their capacity to create what humans actually need. What we've observed in the Amish economic model is a remarkable resistance to external shocks. When supply chains broke during COVID, many Amish businesses actually thrived. They weren't waiting for containers from China. They were making what people needed locally. And this brings us to perhaps the most valuable component of the Amish hedge, one that Wall Street can't sell you and that no brokerage account can hold: Community capital, a network of interdependent relationships built on trust, reciprocity, and shared values. When the financial system melted down in 2008, many Americans discovered they were on their own. Banks weren't loyal. Corporations weren't loyal. Even governments struggled to respond effectively. Dr. Putnam said, "What the Amish understand intuitively is that social capital, the relationships between people, is the ultimate safety net. When formal systems fail, informal networks of mutual aid become the economy, and you can't build those networks overnight when crisis hits. They require years of investment." But here's where our story takes an unexpected turn, because you don't have to be Amish to apply the principles of the Amish hedge. All across America, a quiet revolution is taking place as people rediscover the security that comes from productive land, practical skills, and genuine community. Justin Rhodes isn't Amish. He used to work in corporate America. Today, he produces more food on his small homestead than most commercial farms 10 times the size. "I didn't start this to hedge against economic collapse. I just wanted better food for my family. But along the way, I realized we'd built something that no market crash could take away. We can feed ourselves, we've developed valuable skills, and we've connected with a community of like-minded people. That's real security." And Justin isn't alone. From urban rooftop gardens in Brooklyn to community tool libraries in Seattle, from suburban homesteaders in Texas to small-town revival efforts in the Midwest, Americans are rediscovering that real wealth isn't just about what you own. It's about what you can do and who you can count on. Interview with financial advisor Catherine Williams. Williams said, "I tell my clients that true financial resilience isn't just about diversifying your paper assets. It's about diversifying your capabilities. Can you produce any of your own food? Do you have skills that would be valuable in any economy? Are you embedded in a community where people help each other? These are forms of wealth that no market can crash." But implementing the Amish hedge in modern life doesn't mean rejecting technology or returning to the 18th century. It means being thoughtful about which technologies actually increase your resilience and which ones make you more vulnerable to systemic shocks. The Amish aren't anti-technology. They're selective about technology. They ask, does this tool make us more or less dependent on systems beyond our control? That's a question more of us should be asking about everything from our food sources to our energy systems to our financial instruments. And this brings us to the practical question. How do you actually implement an Amish hedge in your life? First, secure access to productive land, even if it's just a backyard garden or community plot to start. The average American lawn is about a quarter acre. Converted to intensive food production, that space can produce thousands of dollars worth of fresh, organic food annually, a return on investment that makes the stock market look anemic by comparison. Interview with urban farming expert Curtis Stone. Stone said, "I've helped people set up urban farming systems on less than an eighth of an acre that generate $50,000 in annual revenue. But even more valuable than the money is the food security and the skills developed in the process. Second, invest in practical skills and tools that allow you to create essential goods and services. Skills are the original cryptocurrency, portable, valuable in any economy, and impossible to inflate away. When you know how to build things with your hands, repair what's broken, and create what's needed, you possess something no market crash can take away. And these skills tend to appreciate in value during times of economic constraint, unlike many paper investments. Third, build redundant systems for basic needs. The Amish don't rely on a single system for anything important. They maintain alternatives for water, food, energy, transportation, and income. Modern systems are optimized for efficiency, not resilience. That makes them vulnerable. The Amish approach of maintaining multiple ways to meet basic needs seems inefficient during good times, but it's extraordinarily valuable during disruptions. Fourth, develop meaningful community connections based on reciprocity, not just proximity. True community isn't just about living near people. It's about being interdependent with them. It's about having relationships where you contribute value and receive value in return. What we've found in our research is that communities with strong norms of reciprocity and trust are significantly more resilient to economic shocks. These social bonds function as a form of insurance that no company can sell you. And fifth, maintain liquidity and optionality. But think beyond just cash. The Amish don't reject all conventional finance. They simply ensure it's not their only form of wealth. The wealthiest clients I worked with all understood something fundamental. Money is just one form of wealth, and often not the most resilient form. True financial security comes from having options. Different forms of capital you can deploy as circumstances change. When Greece's economy collapsed in 2010, unemployment reached 27%. Banks limited withdrawals to just 60 euros per day. Public services disintegrated, but something remarkable happened. Throughout Athens, abandoned lots transformed into productive gardens. Time banks emerged where people exchanged services without money. Repair cafes helped people maintain essential goods when they couldn't afford new ones. Those who thrived during our economic catastrophe weren't primarily those with gold hidden under their mattresses. They were people who had productive skills, access to land, and strong community networks. The very things the Amish prioritize. We see the same pattern in Argentina's 2001 economic collapse. When Argentina defaulted on its debt, the banking system froze. Inflation soared to 5,000%. Conventional wealth evaporated overnight. Again, those who weathered the storm best weren't gold bugs. They were those who could produce essential goods, who had developed strong community ties, and who had invested in multiple forms of wealth beyond just financial instruments. What we learned from our economic collapse is that resilience isn't stored in bank accounts or even precious metals. It's embedded in productive capacity and social relationships. The ability to create value and exchange it directly became the real currency when our formal financial system failed. But we don't need to look overseas for evidence of the Amish hedge's effectiveness. During the 2008 Great Recession, while conventional wealth strategies failed spectacularly, those who had already implemented elements of the Amish hedge found themselves in remarkably stable positions. When my husband lost his job in 2009, our mortgage was underwater and our 401k had lost 40% of its value. But we had spent the previous 5 years developing our suburban homestead. We were growing 70% of our own produce, had chickens for eggs, had developed side businesses from our practical skills, and were deeply embedded in a community of mutual support. We not only survived, we actually came out ahead because we had forms of wealth that didn't crash when the financial markets did. These aren't isolated examples. They represent a pattern that repeats throughout history. When conventional systems fail, those who control the production of essential goods and services, not those holding symbolic wealth, become the truly wealthy. So how do you actually begin implementing these principles in your own life? The key is to start small, but start now. Every step you take toward productive capacity, practical skills, and genuine community makes you more resilient to whatever economic shocks lie ahead. Interview with financial advisor Melissa Chen, who specializes in resilience planning. Chen said, "I tell my clients to allocate a percentage of their investment capital toward what I call resilience assets, things that increase their capacity to thrive during disruption. This might mean investing in a more productive property, in equipment that allows local production, or in education for practical skills. The returns on these investments aren't just financial, they're existential. For urban dwellers, this might start with container gardening, joining community gardens, or participating in food co-ops that connect directly with local farmers. It might mean taking classes in practical skills, from basic home repair to food preservation to first aid, while gradually acquiring the tools that allow you to be a producer, not just a consumer. And perhaps most importantly, it means beginning to build the community relationships that form the foundation of resilience. Strong communities don't happen by accident, especially in our disconnected modern world. They're built intentionally through shared projects, reciprocal exchange of value, and consistent investment of time and energy. But the returns on that investment are enormous, not just during a crisis, but in everyday life. For those with more resources or those living in rural and suburban areas, the opportunities expand. Investing in productive land, even just a few acres, can provide food security, passive income from agricultural products, appreciating asset value, and a place to build the skills and community that form the core of the Amish hedge. After 20 years in financial services, I came to a realization. The truly wealthy clients weren't those with the biggest portfolios. They were those who had constructed lives that weren't fully dependent on external systems functioning perfectly. They had diversified not just their financial assets, but their capabilities. This doesn't mean rejecting conventional financial strategies entirely. It means complementing them with investments in real resilience. Gold may have a place in this portfolio, so might stocks, bonds, and cash. But they're balanced with investments in productive capacity, practical skills, essential tools, and community capital. Throughout history, we see that purely financial wealth is vulnerable to sudden devaluation through inflation, confiscation, or system failure. But the capacity to produce essential goods and services becomes more valuable during such times, not less. This is the fundamental insight of the Amish hedge. As we speak, the global financial system faces unprecedented challenges. Government debt at historic highs, central bank interventions beyond anything previously imagined, supply chains revealing their fragility, social contracts under strain. What most people don't realize is that our current financial system is a historical anomaly, an experiment in pure fiat currency that's only about 50 years old. Every previous experiment with unbacked currencies has ended the same way. The question isn't if a reset occurs, but when and how prepared people are when it happens. But unlike previous eras, we now face the added complexity of environmental constraints, resource depletion, and technologies that have left many without essential production skills. In this context, the Amish hedge isn't just financial prudence, it's evolutionary adaptation. What we're likely witnessing isn't just another turn of the economic cycle, but a fundamental phase transition in our entire system. The old extractive models are hitting hard limits. Those who have invested in regenerative capacity, the ability to produce essential value from renewable resources, are positioning themselves for whatever comes next. And this brings us to perhaps the most counterintuitive aspect of the Amish hedge. It's valuable regardless of what scenario unfolds. If we experience inflation, the productive capacity of land and essential skills becomes more valuable, not less. If we experience deflation, those with the ability to meet their own needs and generate multiple income streams are buffered from the worst effects. If supply chains break down, local production capacity becomes priceless. And if somehow the current system manages to persist, you've still invested in assets that provide tangible returns, valuable experiences, and genuine security. The Amish didn't develop their approach as a clever investment strategy. They built it around values of simplicity, self-reliance, and community interdependence. What's remarkable about the Amish is that they've maintained an economic model that doesn't depend on constant growth or external systems beyond their control. It's regenerative by design. And while few of us would choose to live exactly as they do, their fundamental insights about what constitutes real wealth and security are more relevant now than perhaps any time in the last century. We began by questioning whether gold is really the ultimate hedge against economic uncertainty. And we've discovered something far more valuable: a set of principles derived from one of America's most financially resilient communities. Across America and around the world, people are rediscovering that true wealth isn't just stored. It's cultivated. It's not just possessed. It's practiced. It's not just accumulated. It's shared. The path to financial resilience doesn't lie in trying to predict exactly when and how the current system might fail. It lies in building the capacity to thrive regardless of what happens, just as the Amish have done for generations. We don't think much about economic collapse. We just try to live simply, produce what we need, help our neighbors, and not depend too much on things outside our control. Maybe there's wisdom in that for your world too. In a time of increasing uncertainty, perhaps the greatest wealth of all is the ability to create what humans will always need, regardless of what markets do. Gold has been valuable for thousands of years. But there's something that's been valuable for as long as humans have existed: the capacity to produce food, shelter, tools, and community. That's the real hedge. That's real wealth. And that's something no one can print more of, inflate away, or cancel with an executive order.